There's no doubt about it. Tesla is one of the hottest properties in the stock market, and investors love it. Tesla's stock price surged an astonishing 743% in 2020, a growth rate that would have put many dot-com stocks to shame during the tech bubble in the late 1990s. Although the stock briefly dipped at the end of January 2021, the price has risen another 24% thus far this year. In this video, we will tell you why you should buy more Tesla stocks now. Number 7. Tesla's prospects. From the company's point of view, the future is definitely bright. Management thinks it can increase deliveries year over year at a rate of 50% and can see 50% annual growth for many years to come as profitability will continue to improve. Tesla fell just short of delivering the 500 vehicles it promised in 2020, but that still was very impressive considering the disruption of the COVID-19 pandemic. And it's riding the high of having 5 consecutive profitable quarters in a row. There are so many reasons to believe in Tesla. It's the first mover in the global electric vehicle (EV) market, where all leading car manufacturers are currently playing catch-up, and a significant player in the autonomous riding sharing market. It's even taken a position in the cryptocurrency market by investing $1.5 billion in Bitcoin. Number 6. Safe ways to invest in Tesla now. All these facts will probably serve to whet your appetite even more if you've been considering taking a position. If that's what you'd like to do, there are several ways to do it without risking too much of your money. After all, Tesla's stock price has perfection priced into it. Everything must go according to plan to justify its nosebleed valuation, and if something doesn't go smoothly, which is more than likely somewhere along the way, the stock could take a huge hit and come back down from the stratosphere. The first option is to build your position slowly. Identify the amount of money you'd like to invest and then make a plan as to how you'll buy your shares. One way is to divide it into 3 parts and establish a period of time over which you'll make purchases. For instance, if you want to invest $15,000, you could plan to buy $5,000 worth of Tesla every 3 months. This will allow you to take advantage of lower prices if they occur. And if they continue to rise, your incremental buys will average out. So some of your shares will be bought at lower cost. Number 5. Tesla stock gets high composite rating. The IBD stock checkup tool also provides a Tesla stock forecast. It shows that Tesla stock has a hardy IBD composite rating of 97 out of 99. The rating means Tesla stock currently outperforms 97% of all stocks in terms of the most important fundamental and technical stock picking criteria. The stock also has a relative strength rating of 96. The rating tracks market leadership. It shows how a stock's price movement over the last 52 weeks measures against that of other stocks. In addition, Tesla has an accumulation distribution rating of B-. That rating analyzes price and volume changes in the stock over the past 13 weeks of trading. Its current rating indicates more funds are buying than selling. A grade of A signals heavy institutional buying. The lowest rating of E means heavy selling. Think of the C grade as neutral. Its relative strength line, which hit record highs in late January, has now been trending downward. The relative line measures the stock's strength against all stocks in the S&P 500. The RS line is the blue line in the chart shown. Typically, the RS line is the strongest stocks is either confirming or leading a stock's price into new high ground. In the stock market, timing is critical. Number 4. Tesla stock forecast. Tesla stock is currently not a buy. On February 22nd, Tesla stock crashed below its 50-day moving average, a critical support level. That occurred as media reports revealed Tesla had pulled its Model Y Standard Range Plus from its website 1 month after its launch. Said Musk in a tweet, "It is still available off menu, but I don't think the range in many driving conditions yet meets the Tesla standard of excellence." On January 25th, Tesla stock hit a record high of $900.40 after climbing as much as 93% from a $466 buy point in a cup with handle. We lay out our forecast for the company here and also the forecast that we think would justify the current market price. In short, despite our positive view of the company's competitive advantages, we think the stock is overvalued, and it's hard to justify the assumptions the market seems to be making. Number 3, pros of buying Tesla stock. One of the biggest bright spots in Tesla's most recent earnings report was a record number of both production and deliveries. In the fourth quarter, Tesla produced 179,757 vehicles, an impressive 71% increase from the same quarter last year, and well more than 145,036 vehicles Tesla built in the third quarter. As for deliveries, Tesla found 180,667 vehicles a brand new home, a 61% year-over-year increase. Tesla had set an ambitious goal of 500,000 vehicles delivered by the end of the year. Even with pandemic-related disruptions on its production lines, the company came incredibly close, delivering 499,647 over the course of 2020. The management team at Tesla believes it can improve on that, promising 50% average annual growth in deliveries over the coming year. Production at Tesla's Fremont, California facility continues to ramp up, with the company upgrading the factory over the last few weeks so it can produce the more expensive Model S and Model X, in addition to the Model 3 and Model Y. The Gigafactory Shanghai currently produces the Model 3, while Model Y production began in late 2020 and will grow over the coming year. As for its newest facility, Tesla noted in the latest earnings report that construction of the factories in Berlin and Austin, Texas continues, and machinery has begun to be moved into the Berlin location. The company plans to use the facility in Austin as the main factory for the Tesla Semi and the Tesla Cybertruck, anticipated for release in 2021 and 2022, respectively. Another sign of improving operations was free cash flow, which remained positive for the second year in a row. Free cash flow hit $2.79 billion in 2020, more than double the $108 billion that the company collected in 2019, with a record $1.9 billion in free cash flow during the fourth quarter, helping Tesla across the finish line. Number 2, cons of buying Tesla stock. Tesla's greatest asset is also its biggest threat, Elon Musk. Hesitant investors will cite tweet after tweet of problematic rhetoric from the company's CEO. Perhaps the most infamous example occurred in early August 2018, when Musk tweeted that he was considering taking Tesla private at $420. After this incident, Musk was forced to step down as chairman of the board in settlement of his suit with the U.S. Securities and Exchange Commission. Unfazed, Musk single-handedly knocked billions off Tesla's market value earlier last year by tweeting, "Tesla's stock price is too high, emo." To be clear, Tesla wouldn't be worth nearly as much as it is today if Musk weren't around. But his colossal status signals the key man risk attached to the company and its stock price. If he ever departed the company to focus on his work at SpaceX or was simply terminated for his behavior, Tesla shares would undoubtedly suffer, though perhaps the only worse fate for Tesla shareholders is if he sticks around. Number 1, should you buy Tesla stock? The ride for shareholders seems to be smoothing out as the company meets quarter after quarter of profitability. That said, investors can't ignore Tesla's off-the-chart valuation multiples. And though the company reported $31.5 billion in total revenue for 2020, its current market cap is nearly $800 billion. Tesla has grown into the largest car company in the world and now sits comfortably atop the industry. If things continue to go Tesla's way, that's not likely to change anytime soon. And if history is any guide, betting against Musk tends to be a bad call. That said, the risks remain. Tesla is no longer the only EV company worth watching, and investors need to be prepared for the idea that its better established rivals may supplant Tesla's position. In short, investors with interest in buying Tesla shares should add them to a well-diversified portfolio. Safe advice for whatever stock you're considering. Do let us know your thoughts and comments about Tesla stock. Please subscribe to the Stock Advisor. Thanks for watching.